Hello, it's Big Chuds. This is the Trading Encyclopedia Daily Education series on my YouTube at Chuds Trading. You can find me on Twitter at Big Chuds and Bitcoin Live, where I am a founding analyst. For today's lesson, we're going to talk about a Japanese candlestick reversal pattern, the three outside down. Well, let's break this down. There's three words. First, we have three, so it's a three-candle combination. Outside means the second candle is an outside bar, but in this case, a bearish engulfing. And down means it goes down. It's a reversal pattern. Let's take a look. So to reverse something, you need a trend. And in this case, you need to have an uptrend. Now, all candlestick patterns are short-term, but the longer, the more mature the trend is beforehand, the better chance you have of getting a return off of a Japanese candlestick pattern, even a short-term one. Now, the second candle in this case, it's both an outside bar from classical charting, but more importantly, it's a bearish engulfing. In candlestick theory, the word outside here actually refers to the candle body, not necessarily the wicks. In this construction, you normally have a smaller to medium type of body and then a bearish engulfing candlestick. And then the third candle closes below the second candle, completing the three outside down. Let's look at another example here. We have pretty much a hanging man, which actually leads to bullish continuation 59% of the time. But in this case, it's followed up with a bearish engulfing, pretty much an equal open and close engulfing candlestick, and then the candle down closing below the second candle. What you want to look for, first we talked about the trend. All right, you want to have a strong trend beforehand to reverse. Number two, look at volume. I have a separate video of volume on three candle combinations. You would like to see increasing volume on the second candle and then even more on the third candle. That would give you the most confidence that you're going to have some strong type of continuation from this reversal pattern and not just, a drop to the EMA 8 or a drop to the MA 20 middle Bollinger Band or something like that. But the point being, you start to see the counter trend volume taking over. Volume is doing its thing, nice, steady, even volume, and then volume spiking on the engulfing candle, volume spiking on the engulfing candle, and then ideally, even more volume on the third candle. In this image, it talks about taking an entry on the close below the third candle. I mean, that's reasonable. I probably would have done something like, if I'm looking for a short, I would be taking it on the up thrust of the first candle as that bearish engulfing is forming, or even on the bearish engulfing candlestick itself, which is itself going to be a reversal, a two-candle a reversal pattern, especially with the sufficient volume where you have at least 1.5 times the volume on the engulfing candlestick. But it's a three-candle combination, a bearish short-term reversal. You need to have a trend, an uptrend preceding it, the bear candle, the close below, and then ideally increasing volume in the second, and then the third candle. This is three outside down Japanese candlestick reversal pattern. And this is the Trading Encyclopedia Daily Education series on my YouTube at Chuds Trading. Find me on Twitter at Big Chuds and Bitcoin Live, where I'm a founding analyst. Folks, thank you so much. And I'll talk to you soon. Big Chuds out.